Hello and welcome to Total Tax Accountants. Today in this exciting video we are going to talk about allowable rental property expenses. So if you're unsure about what expenses you can claim against the rental property business, then hopefully by the end of this video you will have a better understanding about the types of expenses and what are claimable against your rental income. So in this video we will explore the type of rental expenses, how to differentiate between expenses, the list of typical revenue expenses, and in the end we will try to demonstrate it with an example. So first and foremost, what are the types of rental expenses? HM Revenue and Customs has categorized the expenses into two different categories. You could either have revenue expenses or capital expenses. You may have both, but you need to distinguish between these two in order to make the eligible claim against your rental income. So how to differentiate between expenses? Revenue expenses versus capital expenses. Revenue expenses are the tax deductible expenses which you may have against rental property income. They are generally for the running and maintenance of the property asset. You may have replacement like for like, which does not add value. These all fall into revenue expenses. However, capital expenses are not tax deductible against the rental income. They are generally capital expense in nature and they add value to the overall asset. You may be wondering what are the purpose of capital expenses you can have and how to set it off. So capital expenses, if you have any of those, such as which may have added value to the property, these will be claimable against the future capital gains tax. So let's just go through some typical revenue expenses. So some typical allowable revenue expenses are listed below, which you can claim as follows. So mortgage interest, however, that is subject to Section 24 of Finance Act. Mortgage repayment and product fee, again, this also comes under finance cost and is subject to Section 24, where the tax credit is restricted to 20% only basic rate. The other general expenses you may have against which can be set up against the rental income are the council tax, service charge, gas and electricity, land and insurance cost, letting agents fee or a management fee. You may have accountancy or legal fees. You can have ground rent or service charge, travel expense if you visit the property. So if you're managing your own property and you're having to visit your tenants to upkeep the property, then you may claim the travel expense. If you're driving your own car to visit the property, you may be able to claim the mileage at 45p, or if you're using a public transport, then you can offset the travel expense. The general repairs in the property, they all come under revenue expenses as long as they're not adding value to the asset itself. Domestic appliances, like for like replacement, that could be dishwasher, fridge, which have been provided to the tenants and now you're having to replace those. So as long as there's like for like, they fall into revenue category of expenses. Now let's just demonstrate this with an example. So Mr. X has a mortgage-free buy-to-let property with £1,800 rental income. They have incurred the following expenses for the tax year 22-23, which are as follows. So solicitor's fee £250, management agent fee of £2,160. They have had like-for-like appliance replacement. Again, that could be a dishwasher or a fridge or freezer, £699. And they also upgraded the whole bathroom unit for £4,850. So let's see at the tax computation that what are the allowable expenses and what are the disallowed expenses in this example. So the allowable expenses for Mr. X would be the solicitor's fee, which is a legal fee, managing agent fee, again that's the management and legal cost comes under, and then the like-for-like domestic appliance replacement also comes under a revenue expense. However, in this situation, Mr. X also have had to replace the whole bathroom unit and refurb, costing £4,850. In this example, the refurbishment comes under a capital nature of expense, hence this will be disallowed for the purpose of rental income. So hopefully you now have a better understanding how the rental expenses work. So we just summarize this. You may have two different kind of categories of expenses: revenue expenses or capital nature of expenses, whereas revenue expenses are claimable against your rental income, whereas the capital expenses are not claimable against the rental income. However, you may claim any capital expenses against your future rental against your future capital gains tax. So should you have any questions, feel free to get in touch with us by calling us on our confidential line, which is 01494 264826, or feel free to drop us an email, info@totaltaxaccountants.co.uk. Many thanks.